Their next viewer wants to know about big tech, Amazon.
Hey, this is Justin from Portland, Maine. Fast is my favorite show on TV. Thank you guys for having me. It seems like every day another analyst initiates Amazon as a buy or hikes its price target, the average of which is currently $4,300 roughly. What do you think Amazon has to do to convince investors that it's worthy of these lofty price targets? A split? Thank you.
Jeff, how do you tackle this one for Justin in Portland?
So to answer the specific question, I think it's a time issue right here. You know, they've been underperforming for a long time, but I do think it's part of this quality growth trade that probably does okay in this market, and I think obviously does well over the long term. So it's important to keep that in mind. I think what's been going on lately, some tough comparables from last year, that's clear, but they've also been investing really heavily in physical infrastructure. So when you think about their last investment cycle 5 years ago, that was AWS, a much quicker return. I think investors could see the benefit of that investment much more readily. I think now it's just going to take time for investors to be convinced that what they're doing is the right thing. But I think giving Amazon the benefit of the doubt at this point as a capital allocator, it probably makes sense given their track record. So I think you just stay patient with the stock, but there's definitely room here if you hold it over the long term.
I think there are also two questions in Justin's question, and that is what it should do to grow into a valuation, and then a separate question on stock splits, because these are two separate issues, right, Guy?
You know my view on stock splits, but you know, it doesn't matter my view. The reality is if they were to announce one, you and I both know the stock would go higher, whether it's justified or not, just the way the world works right now, number one. Number two, to answer his question, what do they need to do? I'll give you two answers in my opinion. They need to show margin improvement, which has sort of been stagnating the last couple of quarters. And they also need to see a reacceleration of growth in cloud, which I think they can do. The stock has been basically sideways in a pretty narrow range, 3,000 to 3,400-ish since last July. I think it breaks out to the upside. But to answer the question specifically, do those two things, and I think you got to stock this and be north of $4,000.